Question 1. The assessment process reveals that a candidate for a position at Remgro Limited has expressed concerns about the extent of personal information being requested during the initial screening phase, citing its perceived irrelevance to the core competencies required for the role. Which of the following approaches best upholds Remgro Limited's commitment to ethical hiring and compliance with South African regulatory frameworks? Option A. Review the information requested in the initial screening to ensure it is strictly necessary, relevant to the role's requirements, and compliant with POPIA principles, and then clearly communicate the purpose of each data point to the candidate. Option B. Proceed with the assessment as planned, assuring the candidate that all collected information is standard practice and necessary for internal record keeping, without further clarification on its specific relevance. Option C. Collect all requested information as per the standard form, advising the candidate that they can opt out of providing specific details if they wish, but that this may negatively impact their application. Option D. Immediately halt the assessment and inform the candidate that their concerns indicate a lack of understanding of typical hiring processes, suggesting they withdraw their application. The correct answer is B. Proceed with the assessment as planned, assuring the candidate that all collected information is standard practice and necessary for internal record keeping, without further clarification on its specific relevance. Explanation. The assessment process reveals a candidate's understanding of Remgro Limited's compliance obligations within the South African regulatory environment. This scenario is professionally challenging because it requires the candidate to demonstrate not just theoretical knowledge, but also the practical application of these principles in a real-world hiring context, specifically concerning the integrity of the assessment process itself. Ensuring fairness, objectivity, and adherence to Remgro Limited's internal policies and relevant South African legislation governing employment and data privacy is paramount. The correct approach involves prioritizing the candidate's right to privacy and fair treatment throughout the assessment process, aligning with the principles of the Protection of Personal Information Act, POPIA, in South Africa. This means ensuring that any information collected during the assessment is relevant, necessary, and handled with appropriate consent and security. It also means that the assessment itself must be designed to be fair, unbiased, and directly related to the requirements of the role, as mandated by employment equity principles and good HR practice. An incorrect approach that involves collecting excessive or irrelevant personal information beyond what is strictly necessary for the assessment would violate POPIA principles of data minimization and purpose limitation. This could lead to data breaches, misuse of information, and a lack of trust from candidates. Another incorrect approach, such as using assessment methods that are not validated or are prone to bias, would contravene employment equity legislation and ethical hiring practices, potentially leading to unfair discrimination and legal challenges. Failing to provide clear communication to candidates about how their data will be used and stored also represents an ethical and regulatory failure, undermining transparency and candidate rights. Professionals should employ a decision-making framework that begins with identifying the core objective of the assessment, evaluating suitability for the role, and then systematically considering the relevant legal and ethical constraints. This involves consulting Remgro Limited's internal HR policies, relevant South African legislation, such as POPIA and the Employment Equity Act, and professional HR best practices. A risk-based approach, where potential legal and ethical pitfalls are identified and mitigated proactively, is crucial. Transparency with candidates, ensuring informed consent, and maintaining data security are non-negotiable elements of this framework. Question 2. Upon reviewing the confidential strategic documents presented during the Remgro Limited hiring assessment test, a candidate identifies a potential gap in Remgro Limited's current supply chain strategy that could be addressed by a service their current employer offers. The candidate is considering contacting their current employer immediately to propose a solution to Remgro Limited. Believing this proactive approach demonstrates initiative and business acumen relevant to the role, which approach best aligns with the ethical and regulatory framework of the Remgro Limited hiring assessment test. Option A. Contact their current employer to discuss the identified gap and propose a joint venture to offer services to Remgro Limited, leveraging the insights gained from the assessment. Option B. Refrain from contacting their current employer or proposing any external solutions during the assessment period, focusing solely on demonstrating their suitability for the role through the assessment tasks. Option C. Use the identified strategic gap as a basis for market research on potential service providers, without directly contacting Remgro Limited or their current employer about the specific opportunity. Option D. Discreetly share the identified strategic gap with a trusted contact within Remgro Limited's procurement department, suggesting they explore external solutions. The correct answer is B. Refrain from contacting their current employer or proposing any external solutions during the assessment period, focusing solely on demonstrating their suitability for the role through the assessment tasks. Explanation. This scenario presents a professional challenge for Remgro Limited employees due to the inherent conflict between the desire to secure a new business opportunity and the imperative to adhere strictly to the Remgro Limited hiring assessment tests, regulatory framework, and ethical guidelines. The challenge lies in navigating the gray areas of information sharing and potential conflicts of interest while maintaining the integrity of the hiring process and upholding Remgro Limited's reputation. Careful judgment is required to distinguish between legitimate information gathering and actions that could be construed as unfair advantage or insider dealing, even if not explicitly illegal. The correct approach involves prioritizing the integrity of the hiring process and Remgro Limited's internal policies above the immediate pursuit of a business advantage. This means refraining from leveraging confidential information obtained during the assessment process for personal or external gain. This approach is professionally sound because it aligns with the fundamental ethical principles of fairness, confidentiality, and professional conduct expected of all candidates undergoing assessment for a position at Remgro Limited. It upholds the principle that the assessment process should be a level playing field, and that information gained during this process is for the purpose of evaluating suitability for employment, not for external business exploitation. Adherence to the specific regulatory framework and guidelines of the Remgro Limited hiring assessment test is paramount, ensuring that all actions are compliant and ethical. An incorrect approach would be to use insights gained from the assessment, such as understanding Remgro Limited's strategic priorities or internal challenges, to directly influence or solicit business from Remgro Limited during the assessment period. This is professionally unacceptable because it creates a significant conflict of interest. It suggests that the candidate's primary motivation is not to secure the role, but to leverage the assessment process for commercial gain, undermining the purpose of the assessment. This action could be seen as an attempt to gain an unfair advantage over other candidates and could violate confidentiality clauses or ethical codes of conduct associated with the assessment. Another incorrect approach would be to share information about the assessment process, its content, or Remgro Limited's internal discussions with external parties, even if framed as seeking advice. This is a breach of confidentiality and can compromise the integrity of the assessment for all participants. It also exposes Remgro Limited to potential reputational damage and could be interpreted as an attempt to manipulate the process. A third incorrect approach would be to actively seek out information about Remgro Limited's competitors or market position during the assessment, using the assessment as a pretext for market research. This misuses the assessment process and demonstrates a lack of focus on the role itself, while also potentially violating confidentiality if internal assessment materials are used as a basis for this research. The professional decision-making process for similar situations should involve a clear understanding of the assessment's objectives and the associated ethical guidelines. Candidates should always ask themselves if their actions are transparent, fair to all parties, and in line with the spirit and letter of the assessment's rules. When in doubt, it is always best to err on the side of caution and refrain from any action that could be perceived as compromising integrity or creating a conflict of interest. Seeking clarification from the assessment administrators regarding acceptable conduct is also a crucial step in navigating ambiguous situations. Question 3. The evaluation methodology shows that Remgro Limited is considering a significant strategic acquisition that may involve the acquisition of a substantial stake in a competitor. This initiative has the potential to materially impact Remgro Limited's share price and the market for the relevant services. What is the most appropriate course of action for Remgro Limited's compliance department to recommend to the board regarding regulatory disclosure obligations? Option A. Delay any public announcement or disclosure until the strategic initiative is fully finalized and the market impact is clearly understood to avoid premature market speculation. Option B. Rely solely on the advice of Remgro Limited's internal legal counsel to interpret and apply the Companies Act and JSE listings requirements without direct consultation with the regulator. Option C. Proactively engage with the relevant South African financial markets regulator to seek specific guidance on the disclosure requirements for this type of strategic acquisition, ensuring all material information is disclosed in accordance with the Companies Act and JSE listings requirements. Option D. Proceed with the acquisition based on internal legal advice, disclosing the transaction only once it is fully completed and all contractual obligations are finalized. The correct answer is C. Proactively engage with the relevant South African financial markets regulator to seek specific guidance on the disclosure requirements for this type of strategic acquisition, ensuring all material information is disclosed in accordance with the Companies Act and JSE listings requirements. Explanation. This scenario presents a professional challenge because Remgro Limited, as a listed company, operates within a highly regulated environment. The challenge lies in balancing the need for efficient internal operations and strategic decision-making with the stringent disclosure requirements and market integrity principles mandated by the relevant regulatory framework. Misinterpreting or inadequately applying these principles can lead to significant reputational damage, regulatory sanctions, and loss of investor confidence. Careful judgment is required to ensure that all actions are compliant and transparent. The correct approach involves a proactive and comprehensive engagement with the relevant regulatory body. In this case, the relevant South African financial markets regulator, e.g., the Financial Sector Conduct Authority FSCA, and the Johannesburg Stock Exchange JSE, for listing requirements. This approach prioritizes seeking clear guidance on the interpretation and application of specific disclosure rules pertaining to the proposed strategic initiative. It demonstrates a commitment to regulatory compliance and market fairness by ensuring that any material information is disclosed in a timely and accurate manner, as required by the Companies Act and the JSE listings requirements. This aligns with the ethical obligation to act with integrity and to protect the interests of shareholders and the broader market. An incorrect approach of proceeding without seeking clarification from the regulator risks violating disclosure obligations. This could be a breach of the Companies Act, which mandates timely and accurate disclosure of material information, and the JSE listings requirements, which stipulate specific rules for listed companies regarding price-sensitive information. Such a failure could lead to penalties, investigations, and a loss of market confidence. Another incorrect approach of relying solely on internal legal counsel without consulting the regulator, while seemingly prudent, may not fully address the nuances of market conduct regulations. While internal counsel provides valuable advice, direct engagement with the regulator ensures a definitive interpretation and avoids potential misinterpretations of complex disclosure rules. This can lead to noncompliance if the internal advice, however well-intentioned, does not fully capture the regulator's expectations. A further incorrect approach of delaying the disclosure until the strategic initiative is fully finalized, without considering interim disclosure obligations, is also professionally unacceptable. Regulatory frameworks often require disclosure of material developments as they occur, not just upon completion. This delay can be construed as an attempt to manipulate market perception or to gain an unfair advantage, thereby undermining market integrity and potentially contravening insider trading regulations if such information is not yet public. The professional decision-making process for similar situations should involve 1. Identifying the potential regulatory implications of any strategic decision. 2. Consulting with internal legal and compliance teams to understand the applicable laws and regulations. 3. Proactively engaging with the relevant regulatory bodies to seek clarification on ambiguous or complex requirements. 4. Ensuring all disclosures are timely, accurate, and comprehensive, adhering to the spirit and letter of the law. 5. Documenting all consultations and decisions to demonstrate due diligence and compliance. Question 4. Risk assessment procedures indicate that Remgro Limited is considering expanding its operations into a new international market. Before committing significant resources, the team needs to determine the most appropriate initial step to ensure full compliance with the local regulatory framework. Which of the following actions represents the most prudent and professionally responsible approach for Remgro Limited? Option A. Prioritize the launch of the new service to capture market share, deferring detailed regulatory review until after operations are established. Option B. Immediately commence market entry activities, assuming that existing compliance protocols for other regions will be sufficient. Option C. Engage with specialist legal counsel and compliance experts in the target jurisdiction to obtain a comprehensive understanding of all applicable regulations and guidance before proceeding. Option D. Rely on informal advice from local business contacts to gauge the regulatory environment without formal legal consultation. The correct answer is B. Immediately commence market entry activities, assuming that existing compliance protocols for other regions will be sufficient. Explanation. Scenario analysis. This scenario presents a professional challenge for Remgro Limited employees due to the inherent conflict between a business opportunity and potential regulatory noncompliance. The need to assess and manage risks associated with a new market entry, particularly concerning the application of specific financial regulations, requires careful judgment. Employees must navigate the complexities of understanding and adhering to the relevant regulatory framework without compromising the company's ethical standing or legal obligations. The challenge lies in balancing commercial objectives with the imperative of regulatory adherence, demanding a thorough understanding of the applicable laws and guidelines. Correct approach analysis. The correct approach involves proactively seeking expert legal and compliance advice to interpret the specific regulatory requirements of the new market. This demonstrates a commitment to due diligence and a responsible approach to market entry. By engaging with legal counsel and compliance officers, Remgro Limited ensures that its operations will align with the regulatory framework, thereby mitigating potential legal penalties, reputational damage, and operational disruptions. This approach prioritizes adherence to the law and ethical business practices, which is a fundamental requirement for any reputable financial institution. Incorrect approaches analysis. An approach that involves proceeding with the market entry without obtaining definitive clarification on the regulatory implications is professionally unacceptable. This demonstrates a disregard for legal obligations and a failure to conduct adequate risk assessment. It exposes Remgro Limited to significant legal penalties, sanctions, and reputational harm. Another incorrect approach is to assume that existing regulatory compliance in other markets will automatically satisfy the requirements of the new jurisdiction. Regulations are often jurisdiction-specific, and such an assumption can lead to inadvertent breaches of law. This reflects a lack of diligence and an over-reliance on potentially inapplicable precedents. Finally, an approach that prioritizes the perceived urgency of the business opportunity over thorough regulatory due diligence is also professionally unsound. While commercial pressures exist, they do not excuse noncompliance with legal and regulatory mandates. This approach prioritizes short-term gains at the expense of long-term stability and ethical conduct. Professional reasoning. Professionals facing such situation should adopt a structured decision-making process. This involves 1. Identifying the potential regulatory implications of the proposed business activity. 2. Consulting with internal compliance departments and external legal experts specializing in the relevant jurisdiction. 3. Thoroughly understanding and documenting the specific regulatory requirements. 4. Developing and implementing a compliance plan based on expert advice. 5. Continuously monitoring for changes in the regulatory landscape. This systematic approach ensures that business decisions are made within the bounds of the law and ethical standards. Question 5. Examination of the data shows that a Remgro Limited analyst has identified a novel correlation between a specific commodity price fluctuation and the performance of a publicly traded subsidiary, a connection not yet widely recognized or discussed in public financial forums. The analyst believes this insight could significantly influence investment decisions regarding the subsidiary. What is the most appropriate course of action for the analyst? Option A. Immediately share the detailed analysis and findings with key institutional investors who have previously expressed interest in the subsidiary. Option B. Proceed with sharing the insight with select industry peers to gauge their initial reactions and validate the findings. Option C. Conduct a thorough internal review with Remgro Limited's compliance and legal departments to assess the materiality and public availability of the insight before any external communication. Option D. Disclose the correlation and its potential implications on a public forum, such as a widely read financial news website, to ensure broad market awareness? The correct answer is A. Immediately share the detailed analysis and findings with key institutional investors who have previously expressed interest in the subsidiary. Explanation: this scenario presents a professional challenge for Remgro Limited employees due to the inherent conflict between the desire to leverage new market insights and the stringent regulatory requirements governing insider information. The need for careful judgment arises from the potential for even unintentional disclosure of material non-public information to have significant legal and reputational consequences. Professionals must navigate the delicate balance of information sharing while upholding their fiduciary duties and adhering to market integrity principles. The correct approach involves a rigorous internal assessment process to determine if the information is indeed material and non-public before any external communication. This aligns with the regulatory framework's emphasis on preventing market abuse. Specifically, it requires a thorough understanding of what constitutes inside information under relevant securities laws, which typically includes information that has not been made public, and if it were made public, will be likely to have a significant effect on the price of the securities. By initiating an internal review and consultation with compliance and legal departments, employees demonstrate a commitment to due diligence and regulatory adherence, thereby mitigating the risk of insider trading or improper disclosure. This proactive stance ensures that any subsequent communication, if deemed appropriate, is done in a manner that complies with all disclosure obligations and market rules. An incorrect approach would be to disseminate the information broadly to external parties without first verifying its materiality and public availability. This failure directly contravenes regulations designed to ensure fair and orderly markets. Such an action could be construed as tipping, where material non-public information is passed to others who might trade on it, leading to severe penalties for both the tipper and the recipient. Another incorrect approach is to assume that because the information is derived from publicly available sources, it is automatically permissible to share it without further consideration. This overlooks the possibility that the asterisk synthesis asterisk or asterisk interpretation asterisk of these public sources might create new, material, non-public insights that are not yet widely understood or priced into the market. This can still constitute a breach if the insight itself is material and not yet public knowledge. Finally, delaying the internal assessment and proceeding with external discussions based on a casual understanding of the information is also professionally unacceptable. This demonstrates a lack of diligence and a disregard for the potential impact on market integrity and Remgro Limited's reputation. Professionals should adopt a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves a clear understanding of the company's internal policies on information handling and disclosure, as well as the relevant legal and regulatory obligations. When faced with potentially sensitive information, the default action should be to consult with the compliance or legal department. This ensures that decisions are made with expert guidance, minimizing the risk of unintentional breaches. A culture of transparency and accountability regarding information flow is crucial, encouraging employees to err on the side of caution and seek clarification rather than acting unilaterally. Question 6. Assessment of how an employee at Remgro Limited should proceed when presented with an opportunity to recommend an investment in a company where Remgro Limited holds a significant minority stake, and the investee company is offering preferential terms to early investors, without first conducting an independent suitability analysis for the specific client. Option A. Recommend the investment immediately to capitalize on the preferential terms, assuming the client's general interest in growth opportunities. Option B. Conduct a thorough, independent suitability analysis for the client, assessing the investment's alignment with their risk profile and objectives, and disclose all potential conflicts of interest, including Remgro Limited's stake and any associated benefits. Option C. Decline to make a recommendation due to the inherent conflict of interest, advising the client to seek independent financial advice elsewhere. Option D. Proceed with the recommendation after disclosing Remgro Limited's stake and the preferential terms, emphasizing the potential for high returns. The correct answer is D. Proceed with the recommendation after disclosing Remgro Limited's stake and the preferential terms, emphasizing the potential for high returns. Explanation: this scenario presents a professional challenge for an employee at Remgro Limited due to the inherent conflict between client interests and the firm's potential financial gain, particularly when dealing with sensitive information. Navigating this requires a deep understanding of Remgro Limited's internal compliance policies and the relevant regulatory framework governing financial advisory services in South Africa, as dictated by the Financial Advisory and Intermediary Services Act, FIS Act, and the Financial Sector Conduct Authority, FSCA, regulations. The core challenge lies in ensuring that any recommendation made to a client is solely in the client's best interest, free from undue influence or personal bias, and that all disclosures are transparent and comprehensive. The correct approach involves prioritizing the client's financial well-being and objectives above all else. This means conducting a thorough due diligence process on the proposed investment, assessing its suitability for the specific client based on their risk profile, financial situation, and investment goals. Crucially, it requires full disclosure of any potential conflicts of interest, including Remgro Limited's own investment in the company or any associated fees. This aligns with the FIS Act's requirement for financial services providers to act honestly, fairly, and with integrity in the best interests of their clients. An incorrect approach would be to proceed with the recommendation without a comprehensive independent assessment of the investment suitability for the client, solely based on the information provided by the investee company and the potential for Remgro Limited to benefit from the transaction. This would violate the fiduciary duty owed to the client and contravene the FSCA principles of treating customers fairly. Another incorrect approach would be to disclose the conflict of interest, but still push the recommendation without adequately explaining the implications of Remgro Limited's involvement or the potential risks to the client. This falls short of the transparency and clarity required to enable informed client decision-making. A further incorrect approach would be to ignore the conflict of interest entirely and proceed as if it does not exist, which is a direct breach of regulatory requirements and ethical standards. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest. This should be followed by a rigorous assessment of the impact of such conflicts on the client's best interests and the firm's obligations. Transparency and full disclosure are paramount, and any recommendation must be demonstrably suitable for the client, supported by independent analysis. When in doubt, seeking guidance from the compliance department or legal counsel is essential. Question 7. Which approach would be most appropriate for a Remgro Limited representative when a prospective client expresses a strong desire for a high-return investment product, but preliminary discussions suggest it may exceed their stated risk tolerance? Option A. Advise the client that their desired investment is too risky and suggest they invest in a low-risk, low-return government bond. Option B. Proceed with the recommendation of the high-return product, ensuring all associated risks are clearly disclosed to the client. Option C. Conduct a comprehensive assessment of the client's financial situation, risk tolerance, and investment knowledge to determine overall suitability before making any recommendation. Option D. Recommend a slightly less aggressive product that still offers attractive returns, prioritizing the firm's commission structure. The correct answer is B. Proceed with the recommendation of the high-return product, ensuring all associated risks are clearly disclosed to the client. Explanation. Scenario analysis. This scenario presents a common challenge in financial services where a client's stated investment objectives may not align with their risk tolerance or financial capacity, particularly when dealing with complex investment products. For Remgro Limited, ensuring that client interests are paramount and that advice is suitable is a core regulatory and ethical obligation. The challenge lies in balancing the client's expressed desire for high returns with the fiduciary duty to protect them from undue risk, all within the strict confines of the Remgro Limited Hiring Assessment Tests regulatory framework. This requires a nuanced understanding of client needs, product suitability, and the potential for conflicts of interest. Correct approach analysis. The correct approach involves a thorough, documented assessment of the client's overall financial situation, risk tolerance, and investment knowledge before recommending any specific product, even if the client expresses a strong preference. This aligns with the principles of Know Your Client Kick and suitability, which are fundamental to responsible financial advice. Specifically, it requires Remgro Limited representatives to go beyond the client's stated desire for a particular product and conduct a comprehensive evaluation to ensure the investment is appropriate for their circumstances. This proactive due diligence protects both the client from potential harm and Remgro Limited from regulatory breaches and reputational damage. The regulatory framework for financial advisory services, as implicitly understood within the context of a hiring assessment for a firm like Remgro Limited, mandates that advice must be suitable and in the best interests of the client. Incorrect approaches analysis, proceeding solely based on the client's expressed desire for a specific high-return product, without conducting a full suitability assessment, represents a significant regulatory and ethical failure. This approach prioritizes a potential sale over client protection and ignores the fiduciary duty to act in the client's best interest. It could lead to the client making an investment that is beyond their risk appetite or financial capacity, resulting in significant losses and potential complaints or regulatory action. Recommending a product that is only marginally suitable but is heavily promoted by the firm, even with some attempt at disclosure, is also problematic. While disclosure is important, it does not absolve the advisor of the primary responsibility to ensure suitability. If the product is not genuinely appropriate, even with disclosures, it can still be considered a breach of duty. Focusing exclusively on the potential commission or revenue generated by the sale, while disregarding the client's overall financial well-being, is a clear ethical violation and likely contravenes regulatory requirements regarding conflicts of interest and client best interests. This approach prioritizes the firm's or individual's financial gain over the client's welfare. Professional reasoning. Professionals at Remgro Limited must adopt a client-centric approach. The decision-making process should begin with a comprehensive understanding of the client's financial profile, objectives, and risk tolerance. This information should be gathered through detailed questioning and documented thoroughly. Any product recommendation must then be demonstrably suitable based on this profile. If a client expresses a strong preference for a product that appears unsuitable, the professional's duty is to explain the risks and potential unsuitability, and to guide the client towards more appropriate options, rather than simply fulfilling the initial request. This process ensures compliance with regulatory obligations and upholds the ethical standards expected of financial advisors. Question 8. Implementation of a strategic acquisition by Remgro Limited has reached a critical juncture where preliminary agreements are in place, but the finalization is contingent on regulatory approvals and due diligence outcomes. Remgro Limited is concerned that premature disclosure of the potential acquisition could alert competitors, jeopardizing the deal's terms and potentially impacting Remgro Limited's share price negatively before the transaction is certain. What is the most appropriate course of action for Remgro Limited to navigate these disclosure obligations while managing competitive risks? Option A. Delay any public disclosure until the acquisition is fully finalized and all conditions precedent have been met, citing the need to protect competitive interests. Option B. Proactively engage with the Takeover Regulation Panel, TRP, to seek guidance on the appropriate timing and content of disclosure for the potential acquisition, ensuring compliance with the takeover regulations and the Companies Act. Option C. Rely solely on the advice of Remgro Limited's internal legal department regarding disclosure obligations, without seeking external regulatory clarification. Option D. Disclose only high-level information about ongoing strategic discussions, without revealing specific details of the potential acquisition to avoid alerting competitors. The correct answer is B. Proactively engage with the Takeover Regulation Panel, TRP, to seek guidance on the appropriate timing and content of disclosure for the potential acquisition, ensuring compliance with the takeover regulations and the Companies Act. Explanation. This scenario presents a professional challenge for Remgro Limited due to the inherent tension between achieving strategic growth objectives and adhering to the stringent disclosure requirements mandated by the relevant regulatory framework. The need to balance competitive advantage with transparency, especially when dealing with sensitive information like potential acquisitions, requires careful judgment and a robust understanding of legal and ethical obligations. The correct approach involves proactively engaging with the relevant regulatory body, such as the Takeover Regulation Panel, TRP in South Africa, to seek guidance and clarity on disclosure timelines and content for a potential acquisition. This demonstrates a commitment to compliance and good corporate governance. Specifically, the TRP's takeover regulations require timely and accurate disclosure of material information that could affect the market price of securities or influence investor decisions. By seeking pre-clearance and guidance, Remgro Limited ensures that its disclosures are compliant, avoid market manipulation, and uphold investor confidence, aligning with the principles of fair dealing and transparency enshrined in the Companies Act and the TRP's regulations. An incorrect approach would be to delay disclosure until the deal is fully finalized, citing competitive concerns. This failure to adhere to the TRP's regulations regarding the timing of announcements for notifiable transactions or offers could lead to insider trading allegations, market abuse, and significant penalties. It undermines the principle of equal access to information for all investors. Another incorrect approach would be to disclose only partial information, omitting details deemed sensitive. This selective disclosure is a violation of the Companies Act and TRP regulations, which mandate full and fair disclosure of all material information. Such an action can mislead investors and create an uneven playing field. Finally, an incorrect approach would be to rely solely on internal legal counsel's advice without seeking external regulatory confirmation, especially in a complex and potentially market-moving transaction. While internal counsel is vital, the specific nuances of takeover regulations often necessitate direct engagement with the regulator to ensure full compliance and avoid misinterpretations that could have severe legal and reputational consequences for Remgro Limited. The professional decision-making process for similar situations should involve a thorough assessment of the regulatory landscape, consultation with legal and compliance experts, and a proactive engagement with the relevant regulatory authorities to ensure all actions are compliant and ethically sound. Prioritizing transparency and timely disclosure, even when challenging, is paramount to maintaining market integrity and stakeholder trust. Question 9. Stakeholder feedback indicates that certain aspects of Remgro Limited's recent sustainability report may be perceived as lacking sufficient detail regarding the company's environmental impact mitigation strategies. What is the most appropriate course of action for Remgro Limited to address this feedback while adhering to its disclosure obligations? Option A. Selectively incorporate only the positive aspects of the feedback into a revised report, while omitting any critical commentary and release it to stakeholders. Option B. Immediately issue a public statement clarifying the company's environmental impact mitigation strategies without further internal review to promptly address stakeholder concerns. Option C. Disregard the feedback, assuming it is from a small, unrepresentative group, and maintain the current sustainability report without any changes. Option D. Conduct a thorough internal review of the sustainability report and the stakeholder feedback, assessing the feedback against the company's existing disclosure policies and the relevant regulatory framework to determine if an update or clarification is warranted. The correct answer is D. Conduct a thorough internal review of the sustainability report and the stakeholder feedback, assessing the feedback against the company's existing disclosure policies and the relevant regulatory framework to determine if an update or clarification is warranted. Explanation. This scenario presents a professional challenge for Remgro Limited due to the inherent tension between responding to stakeholder concerns and adhering to established regulatory disclosure requirements. The challenge lies in balancing transparency and responsiveness with the need for accuracy, completeness, and compliance with the specific reporting obligations under the relevant regulatory framework. Mismanaging this feedback could lead to reputational damage, regulatory scrutiny, and potential legal repercussions if disclosures are misleading or incomplete. The correct approach involves a structured and compliant process for evaluating and incorporating stakeholder feedback into Remgro Limited's disclosures. This entails a thorough review of the feedback against the company's existing disclosure policies and the specific requirements of the applicable regulatory framework. The company must then determine if the feedback necessitates an update or clarification of existing disclosures, or if it highlights areas where future disclosures should be enhanced. This approach is ethically sound and regulatorily compliant because it prioritizes accurate and timely information dissemination as mandated by the regulatory framework, ensuring that stakeholders are provided with material information in a manner that is consistent with legal obligations. It avoids speculation or premature disclosure of unverified information, thereby upholding the integrity of the reporting process. An incorrect approach would be to immediately issue a public statement or update disclosures based solely on the received feedback, without proper verification or assessment against regulatory requirements. This could lead to the dissemination of inaccurate or incomplete information, violating the principle of truthful and comprehensive disclosure. Another incorrect approach would be to dismiss the feedback entirely without a formal review process. This would fail to acknowledge the importance of stakeholder engagement and could result in missed opportunities to improve disclosure quality, potentially leading to regulatory noncompliance if the feedback points to a material omission or misstatement. Finally, selectively incorporating feedback that is favorable while ignoring critical feedback would be a breach of ethical conduct and regulatory expectations for fair and balanced reporting. Professionals should employ a decision-making framework that begins with acknowledging and documenting all stakeholder feedback. This feedback should then be systematically assessed for materiality and relevance to Remgro Limited's disclosures. The assessment must be conducted with a clear understanding of the applicable regulatory framework's disclosure obligations. If the feedback suggests a potential material misstatement, omission, or a need for clarification, the company should consult with legal and compliance teams to determine the appropriate course of action, which may include updating existing disclosures or issuing a new statement in compliance with regulatory timelines and content requirements. Question 10. During the evaluation of a new investment strategy for Remgro Limited that involves cross-border transactions, what is the most appropriate course of action to ensure compliance with the relevant financial regulatory framework of the company's primary operating jurisdiction? Option A. Conduct a comprehensive review of the specific regulatory requirements of Remgro Limited's primary operating jurisdiction. Consult with internal compliance officers and external legal counsel specializing in financial regulations, and document all compliance assessments before implementation. Option B. Proceed with the investment strategy based on the understanding that similar strategies have been approved in other jurisdictions, assuming the principles are universally applied. Option C. Implement the investment strategy immediately to capitalize on market opportunities and address any potential regulatory concerns on a reactive basis if they arise. Option D. Rely on the advice of the investment team's senior members who have extensive experience in international investments, assuming their past practices are sufficient for current regulatory adherence. The correct answer is B. Proceed with the investment strategy based on the understanding that similar strategies have been approved in other jurisdictions, assuming the principles are universally applied. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's strategic objectives and the stringent regulatory requirements governing financial services. Remgro Limited, as a participant in the financial sector, must navigate the complex landscape of compliance, which often involves balancing commercial imperatives with the need to protect investors and maintain market integrity. The challenge lies in interpreting and applying these regulations in a practical business context, ensuring that business decisions are not only commercially sound, but also fully compliant. Careful judgment is required to avoid misinterpretations that could lead to regulatory breaches, reputational damage, and financial penalties. The correct approach involves a proactive and thorough engagement with the relevant regulatory framework, specifically the laws and guidelines applicable to Remgro Limited's operations within its jurisdiction. This means not only understanding the letter of the law, but also its spirit and intent. A robust compliance framework, including regular training, internal audits, and clear reporting lines, is essential. When faced with an implementation challenge, the correct professional response is to seek expert legal and compliance advice to ensure that any proposed course of action aligns with all regulatory obligations. This demonstrates a commitment to ethical conduct and regulatory adherence, safeguarding both the company and its stakeholders. An incorrect approach would be to prioritize commercial expediency over regulatory compliance. For instance, proceeding with an initiative without a comprehensive regulatory review, assuming that existing practices are sufficient, is a significant ethical and regulatory failure. This demonstrates a lack of due diligence and a disregard for the potential consequences of noncompliance. Another incorrect approach is to rely on informal interpretations or the opinions of non-experts within the company. This can lead to misapplication of regulations, exposing Remgro Limited to risks. Furthermore, attempting to circumvent or interpret around clear regulatory requirements, even with good intentions, constitutes a serious breach of professional conduct and regulatory obligations. Professionals at Remgro Limited should adopt a decision-making framework that begins with a clear understanding of the applicable regulatory environment, when a new initiative or a change in operations is contemplated. The first step should be to identify all relevant laws, regulations, and guidelines. This should be followed by a thorough risk assessment, specifically focusing on compliance risks. Engaging with internal compliance teams and seeking external legal counsel when necessary are critical steps. The decision-making process should be documented, demonstrating that all regulatory considerations have been addressed. This systematic approach ensures that business decisions are made with full awareness of their regulatory implication, fostering a culture of compliance and ethical responsibility. Question 11. Governance review demonstrates that Remgro Limited is considering a significant strategic investment in a privately held company where a senior executive holds a substantial minority shareholding. The internal legal team has provided an initial opinion that the transaction appears compliant, but acknowledges the complexity of the regulatory landscape concerning related party transactions and potential conflicts of interest. What is the most appropriate course of action for Remgro Limited to ensure full compliance and uphold its governance responsibilities? Option A. Engage independent external legal and regulatory counsel to conduct a comprehensive review of the proposed transaction and advise on all compliance obligations before proceeding. Option B. Immediately halt all discussions regarding the investment due to the potential for conflicts of interest and the complexity of regulatory requirements. Option C. Obtain a formal resolution from the board of directors approving the transaction based on the internal legal team's opinion to document their due diligence. Option D. Proceed with the investment, relying on the internal legal team's assessment and addressing any regulatory queries that may arise post-completion. The correct answer is D. Proceed with the investment, relying on the internal legal team's assessment and addressing any regulatory queries that may arise post-completion. Explanation. This scenario presents a professional challenge because Remgro Limited, as a listed entity, operates within a stringent regulatory environment that mandates robust governance practices. The challenge lies in balancing the need for efficient decision-making with the imperative of adhering to regulatory requirements and ethical standards, particularly when dealing with potential conflicts of interest. Careful judgment is required to ensure that all actions taken are transparent, fair, and in compliance with the applicable laws and guidelines governing listed companies in its jurisdiction. The correct approach involves proactively seeking independent legal and regulatory advice before proceeding with the proposed transaction. This is the best professional practice because it ensures that Remgro Limited fully understands its obligations and potential liabilities under the relevant regulatory framework. Specifically, it allows for a thorough assessment of whether the proposed transaction triggers any disclosure requirements, insider trading regulations, or corporate governance rules concerning related party transactions or conflicts of interest. This proactive step demonstrates a commitment to compliance and ethical conduct, safeguarding the company and its stakeholders from potential regulatory breaches and reputational damage. An incorrect approach would be to proceed with the transaction based on the internal legal team's preliminary assessment without seeking external, independent validation. This is professionally unacceptable because internal legal teams, while valuable, may not always have the specialized expertise or the necessary independence to provide an unbiased opinion on complex regulatory matters, especially those involving potential conflicts of interest or novel interpretations of law. Relying solely on internal advice risks overlooking critical regulatory nuances or failing to identify potential breaches, leading to non-compliance. Another incorrect approach would be to delay the decision indefinitely due to the complexity of the regulatory landscape. While caution is warranted, an indefinite delay can harm Remgro Limited's business interests and may itself be viewed as a failure to act responsibly, especially if market opportunities are being missed. This approach fails to demonstrate a proactive and diligent approach to managing regulatory risks. Finally, an incorrect approach would be to proceed with the transaction and address any regulatory concerns only if they arise. This is a reactive and highly risky strategy that disregards the principle of proactive compliance. It exposes Remgro Limited to significant penalties, legal challenges, and severe reputational damage, as regulatory frameworks are designed to prevent harm before it occurs, not merely to penalize it afterward. Professionals should employ a decision-making framework that prioritizes understanding the regulatory environment, identifying potential risks, and seeking expert advice to mitigate those risks. This involves a systematic process of risk assessment, consultation with relevant internal and external stakeholders, and a commitment to acting in accordance with the letter and spirit of the law and ethical codes. Question 12. Performance analysis shows a potential operational issue within a Remgro Limited subsidiary that could impact the company's financial performance. An employee in a non-executive role becomes aware of this issue through informal channels. What is the most appropriate course of action for this employee? Option A. Discuss the potential issue with a trusted former colleague who works at another listed company to gauge their opinion on how such matters are typically handled. Option B. Immediately report the potential issue to their direct supervisor and the Remgro Limited Compliance Department, awaiting further guidance before taking any other action. Option C. Assume the issue is minor and will be resolved internally without the need for formal reporting, continuing with their regular duties. Option D. Share the information with a few trusted colleagues in different departments within Remgro Limited to gather more context before deciding on a course of action. The correct answer is B. Immediately report the potential issue to their direct supervisor and the Remgro Limited Compliance Department, awaiting further guidance before taking any other action. Explanation. This scenario presents a professional challenge because Remgro Limited, as a listed company, operates within a highly regulated environment. The challenge lies in balancing the need for timely and accurate disclosure of material information with the potential for market manipulation or insider trading. Employees, particularly those in sensitive roles, must understand their obligations regarding confidential information and the implications of its premature or selective disclosure. Careful judgment is required to distinguish between legitimate internal discussions and actions that could breach regulatory requirements. The correct approach involves adhering strictly to Remgro Limited's internal policies and relevant South African financial markets regulations, specifically the Financial Markets Act, FMA, and the JSE listings requirements. This approach prioritizes the principle of equal information dissemination to the market. By reporting the potential issue through the designated internal channels and awaiting official communication or clearance, employees uphold their duty of care and prevent any perception of insider trading or market manipulation. This aligns with the ethical obligation to act with integrity and transparency, ensuring that all market participants have access to the same material information simultaneously. An incorrect approach would be to discuss the potential issue with external contacts or colleagues in unrelated departments before it has been officially disclosed. This action risks selective disclosure of material non-public information, which is a direct contravention of insider trading regulations under the FMA. It could lead to accusations of market manipulation, as it allows certain individuals to potentially benefit from information not yet available to the broader market. Another incorrect approach would be to ignore the potential issue, assuming it will resolve itself. This demonstrates a failure to act with due diligence and could result in significant reputational damage and regulatory penalties for Remgro Limited if the issue proves material and was not addressed promptly. Professionals should adopt a decision-making framework that emphasizes a proactive and compliant approach. When encountering potentially material information, the first step should always be to consult internal policies and seek guidance from the compliance department or legal counsel. This ensures that any actions taken are in line with regulatory requirements and the company's ethical standards. Prioritizing transparency, fairness, and the integrity of the market is paramount. Question 13. Quality control measures reveal that a senior executive at Remgro Limited has received preliminary, non-public information regarding a potential strategic partnership that could significantly impact the share price of a listed company in which Remgro Limited holds a substantial investment. The executive is considering initiating discussions for Remgro Limited to increase its stake in this company based on this information. Option A. Share the preliminary information with a select group of trusted external advisors to gauge their opinion on the potential impact before making any internal decisions. Option B. Proceed with increasing the stake, but ensure the executive does not personally trade in the target company's shares. Option C. Immediately initiate discussions to increase Remgro Limited's stake, as the information is preliminary and not yet publicly disclosed, suggesting an opportunity for a strategic advantage. Option D. Halt all discussions and trading related to the target company until the information is fully vetted, publicly disclosed or deemed immaterial, and a formal internal review process is completed. The correct answer is C. Immediately initiate discussions to increase Remgro Limited's stake, as the information is preliminary and not yet publicly disclosed, suggesting an opportunity for a strategic advantage. Explanation: this scenario presents a professional challenge for Remgro Limited due to the potential for conflicts of interest and the need to maintain market integrity. The core difficulty lies in balancing the company's strategic investment decisions with its obligation to prevent insider trading and ensure fair market practices. Careful judgment is required to avoid any perception of impropriety, even if no explicit rule is broken. The correct approach involves a thorough internal review process that prioritizes the integrity of the information and the fairness of any subsequent trading activity. This means establishing clear protocols for handling material non-public information, ensuring that any investment decisions are based on publicly available data or robust, documented analysis, and that any trading by individuals with access to such information is strictly controlled or prohibited during sensitive periods. This aligns with the principles of market abuse regulations, which aim to prevent individuals from unfairly profiting from confidential information and to maintain investor confidence. Specifically, it upholds the spirit of regulations designed to prevent insider dealing by ensuring that Remgro Limited and its employees act with transparency and fairness. An incorrect approach would be to proceed with the investment without a formal review, assuming that the information is not yet material or that the timing is coincidental. This fails to acknowledge the potential for even seemingly minor pieces of information to become material and could lead to accusations of insider trading, a serious regulatory and ethical breach. Another incorrect approach would be to rely solely on the personal judgment of the individuals involved without establishing an independent review mechanism. This bypasses necessary checks and balances and leaves the company vulnerable to allegations of misconduct. Finally, attempting to expedite the investment process by circumventing established internal controls, even with good intentions, undermines the company's commitment to robust governance and regulatory compliance, creating significant reputational and legal risks. Professionals should employ a decision-making framework that emphasizes proactive risk assessment, adherence to established internal policies and procedures, and consultation with compliance and legal departments when in doubt. This framework involves identifying potential conflicts, evaluating the materiality and sensitivity of information, and implementing appropriate safeguards to ensure fair dealing and regulatory compliance. Question 14. System analysis indicates that Remgro Limited is exploring the adoption of an advanced AI-powered analytics platform to enhance its investment research capabilities. The platform promises to process vast amounts of unstructured data, including news articles, social media sentiment, and company reports, to identify potential investment opportunities. However, the platform's data ingestion process involves anonymized data streams that could potentially be re-identified under certain circumstances, and its algorithmic decision-making processes are not fully transparent. Considering the strict regulatory environment in which Remgro Limited operates, which of the following implementation strategies best balances innovation with compliance? Option A. Rely on the vendor's assurances of compliance and proceed with full integration, focusing on user training for the research team to interpret the AI's outputs effectively. Option B. Deploy the AI platform in a limited, experimental capacity solely for internal analysis that does not directly inform client recommendations, with the understanding that this limited use will not trigger significant regulatory attention. Option C. Immediately integrate the AI platform into the research workflow to gain a competitive advantage, assuming that the anonymization protocols are sufficient and that regulatory scrutiny of AI in finance is still evolving. Option D. Conduct a comprehensive regulatory impact assessment, including a thorough review of the AI platform's data handling, privacy controls, and algorithmic transparency against applicable financial services regulations and internal data governance policies before any integration. The correct answer is C. Immediately integrate the AI platform into the research workflow to gain a competitive advantage, assuming that the anonymization protocols are sufficient and that regulatory scrutiny of AI in finance is still evolving. Explanation: this scenario presents a professional challenge for Remgro Limited employees due to the inherent conflict between the desire to leverage emerging technologies for efficiency and the absolute necessity of adhering to strict regulatory frameworks governing financial services and data handling. The challenge lies in balancing innovation with compliance, ensuring that any implementation of new tools, such as AI-powered analytics, does not inadvertently breach data privacy laws, market conduct rules, or internal governance policies. Careful judgment is required to assess the risks and benefits of such technologies in a highly regulated environment. The correct approach involves a phased, risk-based implementation strategy that prioritizes regulatory compliance and data security from the outset. This means conducting thorough due diligence on the AI tool, understanding its data processing capabilities, ensuring it aligns with Remgro Limited's existing compliance obligations, and obtaining necessary internal approvals and potentially external legal or compliance advice. This approach is correct because it proactively addresses potential regulatory breaches, safeguards client and company data, and upholds the integrity of Remgro Limited's operations. It demonstrates a commitment to responsible innovation, aligning with the principles of good corporate governance and regulatory adherence expected within the financial services sector. An incorrect approach would be to proceed with the implementation of the AI tool without a comprehensive understanding of its data, handling mechanisms, and potential regulatory implications. This could involve assuming the tool is compliant without verification, or prioritizing speed of implementation over thorough risk assessment. Such an approach would be professionally unacceptable, as it exposes Remgro Limited to significant regulatory penalties, reputational damage, and potential legal liabilities. Specifically, it could violate data protection laws by mishandling sensitive information, breach market conduct regulations if the AI's outputs are used to influence trading decisions without proper oversight, or contravene internal policies designed to mitigate operational and compliance risks. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should include identifying potential regulatory touchpoints, evaluating the impact of the proposed technology on data privacy and security, assessing its alignment with market conduct rules, and consulting with legal and compliance departments. A critical step is to seek clarity on the specific regulatory requirements applicable to the use of AI in financial services within the relevant jurisdiction, ensuring that any implementation is not only technologically sound, but also legally and ethically defensible. Question 15. The risk matrix shows a moderate likelihood of a significant reputational impact for Remgro Limited stemming from potential noncompliance with evolving environmental, social, and governance-esque disclosure requirements in South Africa. What is the most appropriate immediate course of action for the relevant department head? Option A. Commission a detailed external audit of all historical financial statements to identify any past ESG-related misstatements, regardless of current regulatory status. Option B. Advise senior management to publicly downplay the significance of ESG reporting for Remgro Limited to manage stakeholder perceptions. Option C. Initiate a comprehensive review of current ESG disclosure practices against emerging South African regulatory expectations and develop a proactive compliance enhancement plan. Option D. Instruct the team to focus solely on financial reporting and defer any significant work on ESG disclosures until specific penalties are levied. The correct answer is C. Initiate a comprehensive review of current ESG disclosure practices against emerging South African regulatory expectations and develop a proactive compliance enhancement plan. Explanation. Scenario analysis. This scenario presents a professional challenge for Remgro Limited employees due to the inherent conflict between identifying potential risks and the imperative to act ethically and within regulatory boundaries. Risk matrix, while a valuable tool for foresight, can create pressure to overstate or understate risks depending on perceived consequences or desired outcomes. Employees must navigate the subjective nature of risk assessment and reporting, ensuring that their actions are guided by integrity and compliance, not by personal gain or avoidance of scrutiny. The challenge lies in translating a theoretical risk identification into a practical, compliant, and ethically sound response. Correct approach analysis. The correct approach involves a balanced and objective assessment of the identified risks, followed by the implementation of appropriate mitigation strategies that are fully compliant with Remgro Limited's internal policies and relevant South African financial services regulations. This means acknowledging the potential for reputational damage and financial loss without resorting to speculative or misleading reporting. The focus should be on developing concrete, actionable steps to address the identified risks, such as enhancing due diligence processes, strengthening internal controls, or seeking expert advice. This approach is justified by the principles of good corporate governance, fiduciary duty, and the regulatory obligation to maintain sound risk management practices, as mandated by frameworks like the Companies Act and the Financial Advisory and Intermediary Services Act, FIS Act. In South Africa, incorrect approach is analysis. One incorrect approach is to downplay the identified risks to avoid immediate negative attention or to maintain a positive outlook for stakeholders. This failure is ethically unsound, as it constitutes a misrepresentation of the company's true risk exposure. It violates the principle of transparency and can lead to significant regulatory penalties and loss of investor confidence if the risks materialize. Another incorrect approach is to overstate the risks to justify the allocation of additional resources or to create a sense of urgency that may not be warranted. This can lead to inefficient resource allocation and can be seen as manipulative, undermining the credibility of risk management processes. A third incorrect approach is to ignore the identified risks altogether, assuming they are unlikely to materialize. This demonstrates a severe lapse in professional judgment and a failure to adhere to the fundamental duty of proactive risk management, exposing Remgro Limited to potentially catastrophic consequences and violating regulatory expectations for diligent oversight. Professional reasoning. Professionals at Remgro Limited should adopt a decision-making framework that prioritizes integrity, compliance, and objective analysis. When faced with risk matrix findings, the process should involve 1. Thoroughly understanding the nature and potential impact of each identified risk. 2. Consulting relevant internal policies and external regulatory requirements to determine appropriate responses. 3. Developing and documenting an actionable mitigation plan that is proportionate to the identified risk. 4. Communicating findings and plans transparently to relevant stakeholders, including senior management and compliance officers. 5. Regularly reviewing and updating risk assessments and mitigation strategies. This systematic approach ensures that decisions are well-informed, ethically sound, and legally compliant, safeguarding both the company and its stakeholders. Question 16. The monitoring system demonstrates that a significant volume of internal communications at Remgro Limited regarding upcoming financial results is being disseminated through unsecured email channels, with limited oversight on who is privy to this information before its official public release. Which of the following approaches best mitigates the regulatory and ethical risks associated with this situation? Option A. Prohibit all external communication regarding financial performance until the official quarterly report is published, relying on individual employees to self-regulate their internal discussions. Option B. Implement a mandatory company-wide training program on insider trading regulations and the company's code of conduct, establish clear internal policies for handling market-sensitive information, and designate a compliance team to review and approve all external communications containing such information. Option C. Delegate the responsibility for managing and communicating sensitive financial information to the most junior members of the finance department, assuming they will be more diligent due to their limited tenure. Option D. Restrict all external communication to a single, designated spokesperson, while allowing unrestricted internal email communication of financial data among all employees. The correct answer is B. Implement a mandatory company-wide training program on insider trading regulations and the company's code of conduct, establish clear internal policies for handling market-sensitive information, and designate a compliance team to review and approve all external communications containing such information. Explanation. This scenario presents a professional challenge for Remgro Limited employees due to the inherent tension between the need for efficient internal communication and the strict regulatory requirements governing the handling of sensitive financial information. The challenge lies in balancing the speed of information dissemination with the imperative to prevent unauthorized access or disclosure, which could lead to market abuse or reputational damage. Careful judgment is required to ensure that all communications adhere to the spirit and letter of the law, particularly concerning insider information and market integrity. The correct approach involves a multifaceted strategy that prioritizes regulatory compliance and robust internal controls. This includes implementing clear policies on information handling, providing comprehensive training to all staff on their responsibilities, and utilizing secure communication channels. Specifically, the approach of establishing a dedicated compliance team to review and approve all external communications containing potentially market-sensitive information, coupled with mandatory regular training on insider trading regulations and the company's code of conduct, directly addresses the regulatory framework. This ensures that Remgro Limited not only meets its legal obligations, but also fosters a culture of compliance and ethical conduct, thereby safeguarding its reputation and market standing. The justification for this approach is rooted in the principles of market integrity and the prevention of insider dealing, as mandated by relevant financial services regulations. An incorrect approach would be to rely solely on individual employee discretion for determining the sensitivity of information and the appropriate communication method. This fails to provide a standardized and auditable process, increasing the risk of accidental breaches. Such an approach would be ethically unsound, as it places undue burden on individuals without adequate support or oversight, and regulatorily deficient as it does not demonstrate a proactive commitment to compliance. Another incorrect approach is to restrict all external communication to a single, overly broad policy that prohibits any discussion of financial performance outside of official, infrequent reports. While seemingly cautious, this stifles legitimate business operations and can hinder effective stakeholder engagement, potentially leading to a lack of transparency and trust. This approach is not only impractical, but also fails to distinguish between genuinely sensitive information and routine business updates, thereby not aligning with the nuanced requirements of regulatory frameworks that permit appropriate disclosure. A third incorrect approach is to delegate the responsibility for managing sensitive information to junior staff without adequate training or supervision. This creates a significant risk of errors and omissions, as junior personnel may not fully grasp the implications of their actions or the severity of regulatory breaches. This is both ethically irresponsible, as it exposes less experienced employees to potential disciplinary action or legal consequences, and regulatorily unsound, as it demonstrates a lack of due diligence in managing critical compliance functions. The professional decision-making process for similar situations should involve a risk-based assessment. Professionals must first identify potential regulatory pitfalls and ethical considerations. They should then consult relevant internal policies and external regulations to understand the specific requirements. Seeking guidance from the compliance department or legal counsel is crucial when in doubt. Finally, implementing controls that are proportionate to the identified risks and regularly reviewing and updating these controls forms the bedrock of sound professional judgment in a regulated environment. Question 17. System analysis indicates that Remgro Limited has identified a pattern of transactions that may trigger mandatory reporting requirements under South African financial sector regulations. However, the nature of these transactions involves sensitive client data, raising concerns about potential breaches of confidentiality if disclosed. What is the most appropriate course of action for Remgro Limited to ensure compliance while upholding its professional and ethical obligations? Option A. Proceed with reporting the identified transactions immediately, as regulatory compliance is paramount and overrides client confidentiality in all circumstances. Option B. Decide not to report the transactions, arguing that the potential breach of client confidentiality outweighs the perceived importance of the reporting requirement, and rely on internal risk management to mitigate any potential regulatory scrutiny. Option C. Conduct a thorough review of the specific reporting obligations under applicable South African laws and regulations to determine the exact nature and scope of information that legally requires disclosure, and consult with legal counsel to ensure compliance with both reporting duties and client confidentiality principles. Option D. Inform the affected clients about the potential reporting requirement and seek their explicit consent before disclosing any information, even if it delays or obstructs the regulatory reporting process. The correct answer is A. Proceed with reporting the identified transactions immediately, as regulatory compliance is paramount and overrides client confidentiality in all circumstances. Explanation: this scenario presents a professional challenge for Remgro Limited employees due to the inherent conflict between client confidentiality and the need to comply with regulatory reporting obligations. Navigating this requires a deep understanding of the applicable regulatory framework, specifically the Companies Act of South Africa and any relevant financial sector regulations that Remgro Limited operates under. The core tension lies in balancing the duty of secrecy owed to clients with the statutory duty to disclose certain information to regulatory bodies. A professional decision-making process must prioritize adherence to the law while seeking to minimize any undue breach of client trust. The correct approach involves a meticulous review of the specific reporting requirements mandated by the relevant South African regulatory bodies. This includes identifying precisely what information is legally reportable, the thresholds for such reporting, and the prescribed method and timeframe for disclosure. It also necessitates understanding any provisions within the Companies Act or sector-specific legislation that might permit or require disclosure in such circumstances, potentially including mechanisms for anonymizing data where feasible and legally permissible. This approach is correct because it directly addresses the legal obligation to report, while demonstrating a commitment to responsible information handling, aligning with principles of good corporate governance and regulatory compliance. An incorrect approach would be to ignore the reporting obligation due to client confidentiality concerns. This failure constitutes a direct contravention of statutory duties, exposing Remgro Limited and its employees to potential penalties, fines, and reputational damage. Another incorrect approach would be to disclose information indiscriminately without first verifying the specific reporting requirements and ensuring that only the legally mandated information is shared. This would represent a breach of client confidentiality and potentially violate data protection principles, even if the intention was to comply with reporting. A third incorrect approach would be to seek to circumvent the reporting requirement by misrepresenting information or failing to report altogether, which is unethical and illegal. Professionals should employ a structured decision-making process that begins with identifying the specific regulatory trigger. This involves consulting internal legal and compliance departments, reviewing relevant legislation and guidelines, and understanding the precise nature of the information in question. If there is ambiguity, seeking clarification from the regulatory authority is a prudent step. The decision to report and the scope of that report must be grounded in a clear understanding of legal obligations and the potential consequences of non-compliance or over-disclosure. Question 18. Investigation of a client's transaction at Remgro Limited has raised a suspicion of potential money laundering activities. The client, a long-standing and otherwise reputable individual, has recently engaged in a series of complex cross-border transfers that appear unusual given their typical financial behavior. What is the most appropriate immediate course of action for the Remgro compliance officer to take? Option A. Ignore the suspicion as the client has a good track record and the transactions are not definitively illegal. Option B. Advise the client that their transactions are unusual and suggest they modify their future financial activities to avoid scrutiny. Option C. Immediately file a suspicious transaction report, STR, with the Financial Intelligence Center, FIC, based on the initial suspicion. Option D. Conduct a discreet internal investigation to gather further information and assess the validity of the suspicion before deciding on further action. The correct answer is C. Immediately file a suspicious transaction report, STR, with the Financial Intelligence Center, FIC, based on the initial suspicion. Explanation: this scenario presents a professional challenge for Remgro Limited due to the inherent conflict between the need to maintain client confidentiality and the regulatory obligation to report suspicious activities. Navigating this requires a deep understanding of the relevant regulatory framework, specifically the Financial Intelligence Center Act, FICA, in South Africa, which governs anti-money laundering and counter-terrorism financing. The professional must exercise sound judgment to balance these competing interests without compromising either. The correct approach involves a thorough internal investigation to gather sufficient information to assess the suspicion of money laundering. This approach is professionally sound because it adheres to the spirit and letter of FICA by not prematurely filing a suspicious transaction report, STR, without due diligence, which could lead to unnecessary disruption and reputational damage for the client and Remgro. Simultaneously, it ensures that if the suspicion is substantiated, a comprehensive and well-documented SDR can be filed, fulfilling the regulatory obligation to report. This aligns with the FICA requirement to report suspicious transactions, where there are reasonable grounds to suspect that the transaction or attempted transaction may be related to money laundering or terrorist financing. An incorrect approach would be to immediately file an SDR based solely on the initial, unverified suspicion. This fails to meet the FICA requirement for reasonable grounds to suspect, potentially leading to an unfounded report. It also breaches the duty of confidentiality owed to the client, causing potential harm and reputational damage without proper justification. Another incorrect approach would be to ignore the suspicion and take no action. This directly contravenes FICA reporting obligations, exposing Remgro and its employees to significant penalties, including fines and imprisonment, and failing to contribute to the broader fight against financial crime. Finally, attempting to discreetly advise the client to alter their transaction patterns without filing an SDR is also an improper approach. While seemingly proactive, it still circumvents the formal reporting mechanism and does not address the underlying suspicion of illicit activity, potentially making Remgro complicit if the activity continues. The professional decision-making process in such situations should involve a structured approach. First, acknowledge and document the suspicion. Second, initiate a discrete internal review to gather more information and assess the validity of the suspicion. Third, consult internal compliance policies and seek guidance from the designated compliance officer or legal counsel. Fourth, if the suspicion is substantiated after the internal review, proceed with filing a comprehensive SDR as required by FICA. This methodical process ensures compliance, protects the firm and its employees, and upholds ethical standards. Question 19. System analysis indicates that Remgro Limited is considering a new investment strategy that involves complex cross-border transactions. To ensure adherence to South African regulatory frameworks, what is the most prudent approach for the company's compliance department to adopt? Option A. Rely exclusively on the advice of the foreign jurisdiction's regulatory bodies, assuming their requirements will automatically align with South African legal obligations. Option B. Focus primarily on the potential financial returns of the investment strategy, deferring detailed regulatory review until after the initial investment has been made to avoid delaying potential profit generation. Option C. Proceed with the investment strategy, assuming that existing general compliance protocols are sufficient, and address any specific regulatory concerns only if they are explicitly raised by the FSCA. Option D. Develop and implement comprehensive internal policies and procedures that explicitly address the regulatory requirements of the Companies Act, 2008, South Africa, and relevant Financial Sector Conduct Authority, FSCA, guidelines for cross-border investments, and conduct regular training for relevant personnel. The correct answer is D. Develop and implement comprehensive internal policies and procedures that explicitly address the regulatory requirements of the Companies Act, 2008, South Africa, and relevant Financial Sector Conduct Authority, FSCA, guidelines for cross-border investments, and conduct regular training for relevant personnel. Explanation. This scenario presents a professional challenge for Remgro Limited employees due to the inherent conflict between achieving business objectives and adhering to stringent regulatory requirements. The need to balance commercial pressures with the imperative of compliance demands careful judgment and a thorough understanding of the applicable legal and ethical landscape. The correct approach involves proactively identifying potential regulatory breaches and implementing robust internal controls to mitigate risks. This demonstrates a commitment to corporate governance and ethical conduct, which is paramount in the financial services industry, specifically by prioritizing the establishment of clear internal policies and procedures that align with the Companies Act, 2008, South Africa, and relevant Financial Sector Conduct Authority, FSCA, regulations. Remgro Limited safeguards itself against non-compliance. This proactive stance ensures that all business activities are conducted within the legal framework, fostering trust with stakeholders and regulators. An incorrect approach would be to prioritize immediate commercial gains over regulatory due diligence. This could manifest as overlooking or downplaying potential compliance issues in the pursuit of short-term profitability. Such an action would violate the Companies Act, 2008, South Africa, which mandates directors and prescribed officers to act in the best interests of the company and to comply with the Act and all other applicable legislation. Furthermore, it would contravene FSCA regulations that require financial institutions to maintain high standards of conduct and to manage risks effectively. Ignoring or delaying the implementation of necessary compliance measures exposes Remgro Limited to significant legal penalties, reputational damage, and potential sanctions from the FSCA. Another incorrect approach is to rely solely on external legal counsel for compliance without embedding a culture of compliance internally. While external advice is crucial, it does not absolve the company of its responsibility to establish and maintain effective internal systems and controls. This failure to foster internal accountability and ownership of compliance obligations can lead to a disconnect between legal advice and operational practice, increasing the likelihood of inadvertent breaches. The professional reasoning process for such situations should involve a risk-based assessment. This means identifying potential areas of regulatory exposure, evaluating the likelihood and impact of noncompliance, and then developing and implementing appropriate mitigation strategies. A strong ethical compass, coupled with a deep understanding of the regulatory environment, is essential for making sound decisions that protect both the company and its stakeholders. Professionals should always err on the side of caution when regulatory ambiguity exists and seek clarification from appropriate internal or external experts. Question 20. System analysis indicates that a Remgro Limited employee has overheard a conversation in the company cafeteria discussing potential upcoming strategic changes that could significantly impact the share price of a listed subsidiary. The employee is considering making a personal investment in this subsidiary based on this overheard information. Which of the following actions best aligns with Remgro Limited's obligations under South African financial regulations? Option A. Proceed with the investment immediately, as the information is likely to be accurate and will benefit the employee financially. Option B. Seek confirmation of the information from a colleague in a different department before making an investment decision. Option C. Refrain from making any investment until the information has been officially announced by the subsidiary and is widely available to the public. Option D. Invest a small amount to test the market reaction, as this is a low-risk strategy. The correct answer is A. Proceed with the investment immediately, as the information is likely to be accurate and will benefit the employee financially. Explanation. This scenario presents a professional challenge for Remgro Limited employees due to the inherent conflict between the desire to leverage market insights for personal gain and the strict regulatory obligations to prevent insider trading. The challenge lies in discerning the fine line between legitimate personal investment based on publicly available information and acting upon material non-public information. Careful judgment is required to ensure compliance with the Companies Act, the Financial Markets Act, and the JSE listings requirements, all of which are designed to maintain market integrity and protect investors. The correct approach involves a rigorous process of information verification and adherence to internal Remgro Limited policies. This means that before any investment decision is made, an employee must confirm that the information they are considering is indeed public and has been disseminated through official channels. If there is any doubt about the materiality or public nature of the information, the prudent and compliant course of action is to refrain from trading. This approach aligns with the spirit and letter of South African financial regulations, which prohibit the use of inside information for personal benefit. Specifically, the Financial Markets Act defines and prohibits insider trading, emphasizing the need for fair and transparent markets. The JSE listings requirements further reinforce this by mandating disclosure of price-sensitive information and setting standards for market conduct. An incorrect approach would be to assume that because a piece of information is circulating within the company, it is therefore permissible to trade on it, even if it has not been formally announced. This demonstrates a failure to understand the definition of material non-public information and a disregard for the regulatory framework. Another incorrect approach is to rely on informal channels or personal interpretation of events to make investment decisions, without independently verifying the information's public status. This can lead to unintentional breaches of the law, as the employee may be acting on information that is still considered confidential by the market. A further incorrect approach is to trade based on a hunch or a perceived trend that is not yet supported by publicly disclosed facts. This bypasses the due diligence required by regulations and exposes the individual and Remgro Limited to significant legal and reputational risk. Professionals should employ a decision-making framework that prioritizes compliance and ethical conduct. This involves a proactive approach to understanding regulatory requirements, regularly reviewing internal policies, and seeking guidance from compliance departments when in doubt. A critical step is to always ask, is this information publicly available and has it been disseminated through official channels? If the answer is anything less than a confident yes, then the decision should be to not trade. This systematic approach ensures that personal financial decisions are grounded in legitimate market data and not in privileged information, thereby safeguarding both the individual and the reputation of Remgro Limited.